Are you ready?
Ready.
All right, let's go. Kevin here, Top 1 Financial Advisor and best-selling author. We are here to talk about the stock market. PayPal is one of the most undervalued tech stocks on the market right now, and I am not buying it. I'm not touching this stock, and in this video, we need to break down what is wrong with the company, should you look into it, and what are the lessons that we can learn as investors to avoid bad stocks like this, or at least bad for a time like this. So let's go ahead and break it down. PayPal and me and Square, you can throw them in there as well. We have a long history. We've been doing videos about the company for the better part of 2 or 3 years. I like the way the company is organized. I've always said that. But if you have been subscribing and liking and commenting for a while, you know that I got into PayPal and got out of PayPal back in 2021. And since then, the stock is down, let me double check this, 75%. The stock is down 75% from 2021, and we got out of it before things got worse. So, what is wrong with the company? Like, how do we even get here, and why did I sell it even though it is undervalued? Because by my calculations, the value of the stock right now should be around $197. Right now, it's about 66. It's down 12% today alone. If you bought a stock at 66 and you think it's worth right around $200 or so, this would be undervalued. The problem is it can continue to fall. And just because I think it is worth more does not mean that the market is going to respond in the exact same way. Now, what you need to learn here is, one, just because you think something don't mean it's going to happen. Okay, that I think we have learned quite blatantly, especially in 2021 when I got into it around July and sold it in December because things weren't going the right way. This is one reason why I pay a lot of attention, not to just the value of the company, how the company is organized, and the strategy and the leadership and all that type of stuff, but I pay a lot of attention to momentum. I need to see that you have beaten the S&P 500 and that you are going to continue to do so. If you can't do it in 6 months, and especially you can't do it over a year, then I'm more likely to let you go. And at that time, it underperformed the S&P 500 by a mile, and it is still doing so. From 2021, exactly 2 years ago, to now, again, PayPal is down about 75%. The S&P 500 is only down -2. I can get over a 2% loss. I can't get over a 75% loss. I mean, we're talking well over a 100% gain that I would need just to break even. That's unacceptable. And there are times when you got to learn as an investor, I might as well cut ties now, right? A lot of, you can call this boxing too, but a lot of investing, and especially in boxing, sometimes not taking the big shot, is learning when to block and just take your lumps and keep moving, as opposed to hanging on and waiting to get knocked out and put to sleep in the middle of the ring. That is what's happening right now with PayPal. Here's the other issue. And I would say one of the things that I did not know in 2021 that I do know now, which is, again, we let go of it 2 years ago, so we didn't have to experience this, is competition. Now, back in 2021, I said I didn't know why I was down. And I didn't, because everything about the company was good. In fact, the earnings call they had yesterday, revenue was up 9%, net profit was up 56%. 56% gain in net profit, and the stock is still down 12%, and primarily it's because, yes, they think they're going to grow in 2023, but there is somebody big in the room, and that person, that company, is Apple and Apple Pay. Apple Pay has started to cut into PayPal's business. It's not the only one. You have a lot of those buy now, pay later options. Anytime you go and see a checkout, you see some other things other than PayPal, that's going to be an issue. So Klarna, Afterpay, Apple Pay, Cash App Pay is one now too. I didn't know that until today. I went and booked a haircut. You see my hair is still fresh, but I'll book one for next week. And Cash App Pay was on there. I was like, what is this? Right? So those were other options that did not exist, especially in the last, let's say, 10 or 15 years, as PayPal has been the dominant player. They're running into a space I would call the Netflix space, where Netflix had struggled because of new competition that they did not have before. One of those competitors, Apple, yet again, because Apple does have a streaming TV service. Now, the problem here, which makes Netflix different than PayPal, is that PayPal is a commodity. I don't think any of us really care how you pay for something so long as it's secure. I don't care if it's Apple Pay, I don't care if it's PayPal, I don't care if it's my credit card. I really don't care. If I'm going to get the item and it's not going to cost me any different between any of those options, I'm going to pick the first easiest one for me to go to. And honestly, that's usually the one where I don't have to put in my password, which Usually, if it's just a face scan for Apple Pay, then that's what it's going to be, right? It's going to be from the same card anyway. It's going to be from the exact same bank account anyway. It's which one could I get to the absolute easiest and what is more readily available. Apple Pay is sliding into that slot, becoming more widely available and easier to use in more places. When I forget my wallet, what do I go to? My phone, my Apple Pay, and that's what I'm going to go to get stuff done, which is benefiting Apple and becoming more of the dominant player than what PayPal is. Does this mean that PayPal is done? No, I don't think so. But I think the lesson here is do pay attention to momentum. Just because we believe in long-term investing, which we do, we've held several stocks for years that we talk about, Apple being one of those. Even though it has a rough year, last year, we still continue to hold. Same with Google, same with Microsoft, same with O'Reilly. I still hold that. I don't talk about it. It's still up, and I still hold it, right? In either case, when you start to see that stuff, you have to really take a look and say, yes, I believe in it. I may have a bias for it. I may have an affinity for it, but it's not making me any money right now. I need to hop out and wait until things get a bit better. Now also, a week is not good enough, right? We waited an entire 6 months and the entire market started to fall. And then you have to ask yourself, what is the gap? What is the difference between the entire stock market, which was down that year or down during that period, versus whatever else was going on in the market at that time? So those are the things that you have to pay attention to. And let me correct the record. In 2021, the stock market was actually up. In 2021, it was 2022, which we all remember. The stock market was not up. So you always want to compare against those two. Yes, you can look at the business. Yes, you should look at the business. Yes, you should figure out what you think the value of the company is. But just because you think that, don't be overconfident. Don't be overconfident and think that, yes, because I've done all this math, I've done all these projections, I've done all this reading, that I believe that I am way better than everybody else. I'm going to sit here and take a 70% loss. That's not it, right? Admit at times that you could be wrong. I may have been wrong. I probably was wrong about PayPal because I sure believed enough in it, as well as Square. And y'all saw me on public and other places put my money in those companies, and it did not work. That's why you diversify. Right, that is exactly why you diversify, because what I was not going to do was put all my life savings and take all my other stock and all put it in one. You don't want to do that. These are the lessons that you want to learn from PayPal. Will PayPal bounce back and go back to 200 or 300 or wherever it was 2 years ago? Maybe. Eventually. There are a lot of things that they can do and should do, in my view, to get back there. They were supposed to in Venmo. I think you can do more crypto now. Perhaps they should be a lot more loud about that. They do have some really cool business payment options. If you run a business, you can do that. They could go into the banking space if they choose to. I would do that if I were them, but we'll see. They could be a competitor to SoFi, a better competitor to SoFi, in my view, if they wanted to do that. Is that profitable for them? Because SoFi's not doing well either from a stock market perspective. So we'll see, right? We'll see. All right. Before we go today, I know we wanted to do the top 10 tech stocks that are undervalued. I am still working on that. It took me longer than what I thought it was going to take. Plus the Laker game started yesterday and it was late. It was a lot going on, okay? But we are going to get all 5 videos out this week. That one may be next. If it's not next, then it'll be on Thursday. Either way, y'all going to get your videos, okay? Let me know if you want me to cover anything else in the comments below. And that's it. That's it for me. Talk to you later.